Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Thursday, October 22nd, 2015, and this is the daily report for gold and silver. Interesting day in the markets today with the U.S. equities absolutely on fire, triple digits in the Dow Jones Industrial Average, up about 300 points. Almost everything higher on the day except for gold. Precious metals really slumping on the day. We've got an absolute consolidating candle coming in on the day, and I've got an interesting take on the recent activity that we've seen in gold and what we can expect really in the near future, and this is based upon models created from Elliott Wave as well as Fibonacci retracement studies. So first, let's take a look at the markets through a couple of different eyes, and the first thing that we want to look at really is a daily chart, and on that daily chart what we can see is as follows. As this marketplace has gone up, we had the conclusion, of course, of a third wave, that third wave up. And my sense right now is that we are in a fourth wave corrective period. Now, within that fourth wave corrective period, one model that typically kind of comes out is some sort of a B, and then a final C in terms of the drop itself. And then the C would, of course, conclude the actual corrective period, the ABC, and complete wave 4. Now, based upon that, and based upon the recent activity, and we'll go ahead and pull up a weekly chart where I've put in a couple of fib retracements, we see a couple of interesting things. First of all, our longer term retracements on these weeklies aren't really showing us anything because the week itself has been down, and that's after a dynamic rally pushing this market to approximately 1191. But you can really see it in the daily charts, and let's go ahead and pull that up. On the daily charts, and we have been looking at this for the last week or so, we've been looking at a basic retracement, that retracement running from approximately, call it 1080, all the way up to the highs that we got, and those highs are right here at 1092. When we do that, we get different levels, of course, 23, 38, and so on. Now, we have been slowly meandering to whereas we are now getting a consolidating candle at a 23% retracement point, which is a logical point not for a completed correction, but for a possibility that this is that A wave, and that A wave is concluded. And let me blow this up and show you what I mean. On a typical ABC correction, you'll get your first corrective wave down, and this of course would be your A. Your B is typically anywhere between 50 and 75% that of A. So I've put in one retracement which simply covers this area here, and then this is that 75%. So in other words, if you have the market go from $1 or $2 to $1.25, this is that rise back up, the 75% rise back up. So we could get something like a B, a nice little rally from about 1165 up to about 1184, that being a $20 move, and that would be the conclusion right here of our B wave. And then the final C wave is going to terminate. Flat is not as likely as the market drifting a little bit lower, and if in fact the market drifts a little bit lower, as I said, I'd be looking for around 1060 to maybe 1050, because at 1048 you come in with this particular retracement right here, which to me, that's a 38% of that larger move. So I believe that that's possible in terms of how this all plays together. So what I'm looking for is as follows. As I said, it wouldn't surprise me, of course, to see some sort of a pivot or key reversal, some sort of a candlestick pattern, whether it is a three-river morning star, whether it's an engulfing bullish, some kind of a pivot candle, letting us know that in fact we've concluded this very, very minor wave. And of course, the minor wave we're looking at is the conclusion of this A into our corrective or counter wave, our counter wave B up, and then our final C wave down, and that would complete our fourth wave. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap up and review. Bye-bye.